Welcome to another episode of the Transparent Trading Academy. This is your host, Trader Travis, author of the best-selling Amazon book, Option Trading Made Simple. Now, if you're new to the Transparent Trading Academy, this is your opportunity to see myself, an average guy, try to take $1,000 and turn it into $1 million trading only one stock. Now, I begin this journey with two accounts that I will use as a side-by-side comparison for performance. One account, I invested roughly $1,000 in a traditional buy and pray approach, as most people know it as buy and hold. Then I have another $1,000 I invested. I'm going to trade stock options. Now, if you're not familiar with stock options, they are a way for you to make money in the stock market, no matter if it's going up, down, or sideways. So because you can make money in any situation, your performance is generally higher. However, we will see in this case study. So now that I've updated you on the more active side of the portfolio, now I'm going to jump over and show you the buy and hold performance, and then kind of do a pros and cons between the two, because it's something my mentor once said: results don't lie. Okay, so never let someone's opinion. People might say buy and hold. There are a lot of people who really turned off with buy and hold after the market crash of 2007 and 2009. And they believe that a more active, like a day trading style, will make more money. And what I always say is, don't believe in an opinion, believe your results, because results don't lie. So never let your opinion or someone else's opinion influence your investment decisions. So let's say someone says, you know what, you can't beat the market, it's just best to buy and hold. Well, I'll say, well, don't believe them. Believe your real world results. If you tried to be an active day trader and you lost money, then your results are right. It's best for you in that particular situation to be a buy and hold investor. However, if you succeeded with an active style, then it would be stupid to ignore your real world results and believe someone's opinion that you can't time or beat the market. So let's first look at, before I show you the performance here, I opened this one on the same day I opened my active trades on September 15th. So we'll look at the profit and loss here in a second. But before I do, let's pull up a chart here. This is a 2-year chart of Starbucks. Now, it's my belief, based on my reality, that the stock market is perfect and performs wonderfully all by itself. This is a 2-year chart of Starbucks. The problem arises when we as humans intervene, and that's active trading. If I just bought and held Starbucks stock, 2 years ago, I bought Starbucks when it was trading at like 37. Right now it's at $60, and it's already had I believe a 2-for-1 split. So it was even higher at one point. So now I have more shares. Okay, but regardless, let's pretend like it didn't have a split. I'm buying it at 37, is worth 60. That's great. It took me an investment of time, one time to buy it, and I just sit and ride it out. It works perfectly. And I've seen it over and over again. When we as humans intervene and try to improve something that works, that's where the problems arise, okay? So what I want you to think of is, the more interactions you have with the stock market means the more chances you have at losing money. Most people view it the other way. They're overly optimistic, and they feel like the more interactions they have, the more they will make money. But I want you to always prepare and protect yourself from losing money. Okay, remember Warren Buffett's rules, the rules of a billionaire. I want you to think and act like a billionaire. So the more interactions you have, the more chance you have at losing money. With the active style, you have to be in the market more. So by its nature, it's more risky. So that's one advantage the buy and hold style has over the active style. You see, most people think of it kind of the opposite way. And what I want to do is pull up a picture right here, and I'll give you an example. Again, what I said, most people think active style, like a day trading style, you make more money. But active trading is more prone to human error and bad decisions. And that's why active trading sometimes fails for people. So, just hearing that, you're going to kind of lean towards thinking maybe I'm against active trading, but I'm not, because you'll see over time that a lot of options trading and that more active style allows me to do things and have flexibility that buy and hold doesn't. So stock options are just like a perfect hybrid between a lottery ticket, protection against losing a lot of money, and earning a monthly income. All right, so let me get back to this picture here. Think an electrical obstacle course. They have these in kind of around the country, and pretend like it was $1,000 to play this, to see if you can make it through it all the way. Now pretend like these shocks are market crashes. And so let me pull up, I don't know, Starbucks. Yes, Starbucks did actually fall in price during the last market crash. So let's pretend like those shocks are a market crash. where the stock market may drop, 50, 60%. Now, it's going to take a while to get through this electrical shock. All right, it's going to hurt. But once you get through it, there's a $10,000 prize at the end. Buy and hold. Okay, so we got shocked here. It hurt, but we held on. At the end of it, this is now a 10-year chart. Starbucks is at $60 versus where it was, 10 years ago at around $12, $13. And again, this is excluding any splits, dividends, and all that. Okay, so think electrical shock course. Now, let's imagine they change the rules on you. It's still $1,000 to play. Now, $1,000 is like our initial investment on a buy and hold style, but this time we're taking $1,000, we're putting it in this game, this electrical shock course. Now, in order to get the same $10,000, they've changed the rules on you. Now you have to go back and forth through the course 10 times. Instead of just getting through the course one time and getting the money, you have to go through it, back and forth 10 times. The more shocks you have, the more chance you have at giving up and forfeiting the 10K. About the fifth time, you might be like, this is not even worth it. I'm going to take my money and run. So that is one of the advantages the buy and hold style has over the active style. Because with buy and hold here, when I invested this money here, I was initially losing money, for about a week or so. But that money is not realized until I sell. So it's really just a paper loss. And the advantage of buy and hold, if you have a good ETF or stock, you can kind of ride it out and wait for things to recover. So pulling up my stock chart here, and you can see that I am actually now making money with the buy and hold approach, about $61 here. And so I was able to sit and ride out that loss, and now I'm making money. And the investment of my time was only one time. It took me maybe 5-10 minutes to place that trade here on September 15th. I haven't really needed to focus on it anymore. I don't watch it. I don't monitor it. That's the purpose of buy and hold. You set it and you forget it. So it both saved me time, efficiency. It's more efficient that way. And I can ride out any kind of loss, if I'm in a good stock or ETF, and to wait to profitable territory. Okay, let's come back here to the active style here. Let's see. I had all of these trades here. Now, granted, they didn't take a lot of time, but look how many more trades I made just in the first batch, in the first couple of weeks there. Look how many interactions I had with the market. Think electrical shock course. And let's look at how much I lost there. First batch, 38.30. Second batch, 23.19. So I lost $61 there, divided by I think it was 1,033 we had initially invested, per each portfolio. So you can see that just all those interactions, again, electrical shock course, 5.9%. So roughly 6% of my account I lost, with the more active style there. And it's because I can't ride out the loss like I can with a buy and hold. With options, you have a finite time before you have to close it out. These options have an expiration date. So I can't ride out any loss. I have to learn how to take my losses and move on. And that's one of the keys to success, is learning how to lose money so that it really doesn't hurt you. And that's why I bring up this. This is a sheet I give to all of my students so they can understand this. This sheet, as a matter of fact, is standing. So right now, the buy and hold portion is actually making more money than the active style. But remember what I said when I started this, okay? Results don't lie, okay? You never want to let someone's opinion influence your investment decisions. So we want to evaluate our real world results. In this experiment that I'm doing right here, showing you two portfolios side by side, a buy and hold portfolio versus the active style side by side. This experiment will answer that question for me. Is it better for me to be a buy and hold investor versus an active option trader? Not is it better for you because you're not me, you don't have my skill set. Maybe you can't do what I've done here. But for me, is it better for me to be a buy and hold investor versus an active option trader? All right, you take care, and I can't wait to talk to you in the next case study update. All right, bye-bye. Hey, I just want to remind you before you go that if you want to watch the full-length videos, just go on over to TraderTravis.com and look for the Transparent Trading Academy links. Now, membership in the Academy is completely free. It's my way of adding value to your life without you having to pay me a dime. And for a limited time, I'm giving away a bonus to all new members. It's called the Hot Stock Formula. This tutorial is going to teach you how to find the top 10 to 20% of all stocks in the market. Again, if you're interested, just go on over to tradertravis.com and sign up for a free membership. You take care. Have a great week. Bye-bye.